Hi everyone, hope you're all doing well. I wasn't going to do this video until Saturday, just thought I'd do a little bit of a update on the markets, but it's took another little tumble right now, so I thought, you know what, let's bring this video forward to Friday. I might have a day off on Saturday now because, like I said, I didn't want to, like I did a card factory video earlier and I thought I'll let that run and then do a video on Saturday talking about the stock market, the stocks I bought and everything like that. But yeah, because of the stock market going down even further today, which I didn't think it would have such a crazy drop once again, but it keeps doing this thing of like pre-market goes red, it gets close to the open, it starts recovering, and then we get into the stock market trading and it just slumps down. It's just done it the last 4 days, and I thought surely it can't keep doing this. And once again, we had exactly the same thing happen. Pre-market recovery looks green, and then we get into trading, and about an hour in, and it just slumps down. I was on the Patreon and Discord, by the way, if you want to join that, the links in the description. And I was saying it just keeps doing this process all the time. And all day I've been posting on the Patreon, like reinsurances of historic events and the recovery and everything like that. And I thought as well I'll do a little one on YouTube. At the end of the week I was like doing a little bit of a recap of the stocks I bought. So like I say, I was going to do this on Saturday, but I thought I'd just bring it to Friday with everything that's going on. Might be no video on Saturday. I'll see exactly. We'll see what goes on. But yeah, smash the like button. 300 likes once again the target. That'll be absolutely amazing. But yeah, if we take a look at the Nasdaq, I'm doing a little. Hopefully you don't mind doing this. It just means I can get the video out a little bit quicker than normal. I'm doing a bit of a screen recording of me. So hopefully you enjoy this sort of format. But we've got the Nasdaq here. You can see that it's come down a little bit once again, and the drop that we have now, with 11.2% down, quite a fair bit of a drop. But just from like a point of view of like, before I talk about the stocks that I bought, just like a confidence point of view, like sure that, you can see that drop right there, it's quite a significant drop, but when you actually put it onto like a 5-year perspective, I can remember this drop here. This was a really nice buying opportunity. This was over the Christmas period as well. I think it was, like Christmas, like right over like Christmas Eve and all that. Like the stock market I was trying to do like, I remember because I was trying to do like last minute Christmas shopping, and like I saw the stock market going down, and I was literally like having to like run into a store and then go onto a bench, buy some more stocks, and then run into another store. And like I remember that time quite well. So that was a nice little dip. And then obviously the March dip that we had here, obviously you can see that, but you can kind of slowly start. I can't even speak. You can slowly see the little dip starting to creep in the stock market chart, but it's nothing like this. But the key thing is like, these are only two smaller dips here. Like there was only, I think, tension at the time that was caused between a lot of like political things was the main reason for this drop. But this one here, obviously, most of you guys probably know this one. It was the CV pandemic, and you think about it, like pandemic, when this drop happened, this had never really happened in the stock market. Like the stock market's been through like world wars and it's recovered. The stock market's been through like economic collapses and it's recovered. It's been through the biggest terrorist attack ever in 2001, I think it was right now. I can't remember off the top of my head when 9/11 was. The stock market's been through so many stuff and it's recovered. And this one here, this pandemic drop, that was a massive drop, 30% drop there. And that was a 30% drop on, like, literally, that was like end of the world stuff. Like, we generally didn't know how bad it was. Like, we didn't know, okay, is this going to shut the economy down for 6 months, 2 years, maybe even more? How bad is this going to affect companies? Are companies going to go bankrupt? How many people are going to lose their life? Like, it was a general question going on, like, this could be really serious, forget what's going on in the stock market, like people's health, it's going to be really damaging. You don't get that with say if you have an economic collapse, you're like, people are going to lose their jobs and everything like that. But this was actually like people are going to lose their jobs, but even worse, like the health effect this is going to have on people. This is probably, I would say that a pandemic is probably the worst thing that could happen to the stock market. And we've been through that. And do you know what happened? It recovered. And look, I think what it took, only a few months for the stock market to recover, and that was like end of the world stuff, and the stock market recovered it. So now we've got this dip here, which you can kind of start to see that creeping on a little bit on the chart now. But I mean, if we go on a max point of view, you can't see it too much, but from a little point of view, like we can see it creeping up a little bit. But should we really panic about this dip? Like we've most of us have been through a March dip where it was like end of the world stuff. Like this is realistically nothing crazy, what's changed? Is there a pandemic out there? Well, is there a new pandemic out there? No, that's the thing. Like whenever these dips happen, they always recover, and we've been through dips that are way serious than what's going on right now, and it's recovered. And the thing is as well with these dips is that, let's put ourselves back in like March and April time, is back in them dips, people were a little bit hesitant. And then when we got from there to probably about, October time or something like that, the amount of people that I had that started saying, I got investing in March, and I was just kind of getting used to it, and I wish I bought more. I always hear that all the time, like I wish I bought more, like in March, I wish I bought more stocks. And, that's the benefits of buying on the dip. You make more money in the long term. Dips in the short term mean more money in the long term. If you can get a stock you like at an even better price, that means you're just going to make more money, and they're the best times to buy. And that's the thing, you got to get around the mindset of like stock market dips are the best time to make money. I don't have the numbers in front of me, but I know there was a survey like done, and it was like if you always invested at a peak before like a 10% dip, you'd still have such amount of nice gain. But if you always bought in the dips, how much more money you made from buying in dips, you always made more money. And honestly, like it's the best opportunity to make money on the stock market. So it's a pain in the short term. Like at these sort of times, I try not to look at the stock market, even though I talk about it so much. I try not to look at the stock market too much. I kind of do like maybe 20-minute, half an hour stints, and then I have a break. I don't hardly look at my portfolio. The only time I go on my portfolio is to check individual positions to see how much they're down, and then probably buy them. I never kind of look how much my portfolio is up or down, because then you can start playing with your head a little bit. And I just like going on, buy it and off again. That's why I don't even when the stock market's up, I don't get hooked on what my portfolio is doing too much. And I hardly look at it, because the same thing happens, that you kind of get hooked on them gains and they get taken away. You're like, oh, but I used to have so-and-so. That's why I like just, kind of sitting back and I always use apps, because then I can't see how much I'm up or down on a position. I can just see what the share price is, and I can kind of work things out from there. And I always find that really does help, not getting caught up in what's going on. And that's the thing, like, when we talk about like what the dip's currently going on right now, like what's currently changed with the stock market? Like, previously, like the March dip, we said we had a pandemic. That's what changed the stock, right? That's what changed the stock market. But realistically, I mean, we've had probably stocks that have been overvalued and due a pullback. I 100% agree with that. That's what I've been saying on the channel quite a bit. The stocks are due a pullback, 100%. But apart from that, I think the only other thing is like Jerome Powell came out the other day and said, at some point we'll have to put interest rates up. Well, we knew that was going to happen at some point. Like we said on the channel, like, we can't have 0% interest rates forever. They have to go up at some point. I didn't think it would affect the stock market realistically right now. I thought it'd be a thing further down the line, just like if Biden was to change tax rates. I thought that might be something that moves the stock market further down the line. But not much has changed really. We just had a bit more correction. We had a bit of an overvalued stock market. The stock market's due a pullback. But it's starting to get to the point now where you're like, okay, has the stock market had a pullback or has it overcorrected? And that's where it's starting to get to now. Like, I think that the valuations, from my point of view now, I think a lot of valuations are back at fair value. They're not undervalued, but they're about fair value, which is a key point. So, yeah, I mean, who knows? It might go down even further. We might have even more undervalued stocks. But at the moment, the valuations are definitely looking a lot more attractive than what they did only 2 weeks ago, for sure. So those are probably the key points that I'm going to say. And also, I'm going to say that when you're buying, also remember, at the moment you're investing for the long term. Like, all the stocks I'm buying right now, I'm not thinking, oh, is it going to go down 5% in a week? Is it going to go down another 10% in a week? I'm always thinking, where's this stock going to be in 2 years' time, 3 years' time, 4 years' time? And every time I'm looking at them stocks and buying it, okay, I'm like, oh, I'm going to make a lot of money on this one, And that's what you got to keep running like long term in your head, long term investing, and think about where them stocks are going overall. Hopefully, that kind of helps on that sort of view. Stocks always recover, buy the dip, think about where they're going in the long term. I'm sure plenty of people were thinking, if only I could go back to March and buy companies that have been sold off. Well, you've kind of got something like that right now. Anyway, what I'm going to do now is I'm actually going to go through some of the stocks that I have been buying. So I'll show you some of the stocks that I've been buying. There's quite a few that have been really interesting me, but I'm trying to not buy too many at the moment because it just means more and more upkeep. At the moment, the biggest position, all my positions are down 10% or less. So I've got no positions that are down over 10%. So I'm doing quite well on the averaging side. There's still, I would say that Turtle Beach and Skills are two companies that I would like to buy more of, but I'm still up quite a bit on them, so I have to wait for them to come down, but I would love to buy them, but my pride's kicking in about averaging up on them ones, so that's probably something I'm going to say on them too. And then I would, everything else is going good, fine, I'm not down double figures on many positions. There's only one position I'm down 10% or more on at the moment, which is EHang, which is a spec play, and I'm fine with that. That's the thing with spec plays. If you buy spec plays in a bear market, they go down an absolute ton. And also it had a short report as well. Let's not forget that. But yeah, that's why I don't tend to buy spec stocks. I've only got 3 spec stocks: Card Factory, which is up like 50%, Planet 13, which I think's like 8% down right now, EHang, which is down I think around about 30% right now. So that's why you don't make spec plays a big position and build a portfolio of spec plays, because if you did, you probably have a lot of stocks that are down like 30% right now. So that's just something to be really careful of. So overall, I'm pretty happy that I've only got one position that's down 10% or more, so that's pretty good on that point of view. But we'll go through some of these. So I did start buying some shares in EHang again. Don't want to buy too much because, like I said, I want to keep it a small position being a spec play. But you can see, obviously that's the damage of the short report here, but we have been downtrending. And I just got to the point where I was like, okay, I'll just buy a little bit more. So I did buy a little bit more of my EHang position. Planet 13, I bought some more Planet 13. Let me go on to the right one. There we go. I always wanted to buy this at $5, and now it's back down at $5. I'm like, okay, this is an absolute steal. So my average is somewhere around about the $6 mark. If I can get my average into that $5 mark, it's lost 30% of its value. So if I can get it a little bit lower, that'd be absolutely amazing on that one. I have been buying more shares in Amazon. If I was to guess, I'm probably about, you'll notice I'm always buying the companies that I'm down on. You never see me buying the companies that I'm up on. I've had a few questions like, am I buying any more gang? No, I don't want to ruin my average because I'm still up like 30% on that one. Same again, don't want to ruin my average on that one. Still up quite a bit on that one. I always buy the companies that are down because then I can have more upside on them companies. Obviously Amazon flatlined for a while, but then that's taken a little bit of a dive recently. I think I'm about down somewhere between 7% on that one. So that's a good blue chip that I'm starting to build up at the moment. Beyond Meat, they've just brought really good news out of every kind of couple of weeks really at the moment. It's been really good for them. I think that this stock will be definitely above $200 stock by the end of the year. This has had a little bit of a dip at the moment. I think I'm only down about 3% on this one. I'm not down that much on it. I have started buying a new company, which is Corsair. So I was frustrated because I was like watching Turtle Beach for a long time. If I just go on to Turtle Beach, obviously you guys know I like Turtle Beach more than Corsair, but I still don't want to disrupt my average. Look how much that's down today, 16%. That's absolutely crazy. Like Turtle Beach at the moment, if I didn't have shares in Turtle Beach, I'd be loading the boat right now, but I'm still like a good 30% up on this one or something. So I don't want to ruin my average too much. But yeah, that's a crazy dip. I would be buying that one over Corsair, but I don't want to ruin my average on Turtle Beach, so I have started buying some shares in Corsair. The valuation on this one has come down a lot bit now. It's down to about a 2.7 billion market cap, which I think puts it on somewhere like a 10 price sales ratio. I think the forward P is also somewhere like 22-ish right now. Which is really attractive, and yeah, this one has fallen quite a bit recently. What we're down 34%. So yeah, this is now buying range for me in Corsair. I like Corsair at this valuation, $30 and below. That's a nice pickup time. It's just gone below $30 as well. A nice pickup there. This one is slowly coming my biggest position in the stock market. This and another one, which is Draftkings. $50, I love it at $50. It's realistically not really dropped as much as the other one. I mean, it's down 16%, but this only little jump here was the announcement of the NFL partnership, I believe it was. No, it was earnings. Sorry, earnings. Earnings that took it up, and it's just basically reversed earnings. So this one really isn't down compared to the whole market, and you just see this is actually a really nice little uptrend that's going on here from Draftkings. So yeah, $50, I love this company. Slowly coming my biggest position in the stock market. InMode's still up there. I'll show you the other one in a second that I'm building up into a really heavy position as well. But yeah, InMode, Draftkings, and I'll show you the other one in a second. But this is the next one. So I have started buying shares in Golden Nugget. Obviously, I'm not a fan of the balance sheet on this one. I think the balance sheet is a little debt heavy. I don't like how management put a lot of debt from the other Sandre's business onto this company and then took it public. I don't like how they did that, but that's the one negative I have with this company. Everything else, the profit growth, the revenue growth, the expansion plans, the industry is saying, you guys know that I just showed you Draftkings, Gang as well. You know, I love this sort of industry. And Golden Nugget below $14, in my opinion, is easy money. $13 I really like. At $12, it's given me a hard time of like, I can justify buying this one at this valuation so much. And I'm like, I said that I never want to make Golden Nugget a bigger position or the same size as Gang or Draftkings, but I'm looking at this one now and I'm looking at an 800 million market cap. I'm looking at it $12 and I'm like, this is so cheap. This is so cheap. You know, since the 29th of December, this stock has lost half its value. And I think the price to sales ratio is something like 4. And like Draftkings is like 30 or something. That just gives you an example of the valuation here. You know, Golden Nugget is like a 4 price sales ratio. Draftkings is like a 30. The difference is crazy. And the thing is, Golden Nugget's actually growing faster than Draftkings. Sure, you know, Draftkings is always going to be the bigger company in the long term, but you know, it just shows you how cheap this valuation is compared to someone like in its area, Draftkings. It's so cheap valuation. And yeah, that drop is just absolutely nuts. And like I said, there's only the little one negative I have with that, which is the debt on the balance sheet and how that was put on the balance sheet, because the company didn't have debt on it previously. And yeah, Golden Nugget at $12 is... I do really like this at $12. Like I in my opinion, Golden Nugget should be a $20 stock, $20 to $25 stock right now, and that's how cheap it is. And then I start running the numbers down the line. I'm like, Golden Nugget's like a $30 to $40 stock in the next 2 years, and at this valuation, it's just so cheap. And yeah, I just keep buying it. I just keep buying it. And I just even recording this video, I'm like, I might. I might buy even more off this video. So yeah, that's another one. So this is the next position that is, so InMode, which I'm up 100% on, and then Draftkings and this one, Shopify, are my 3 kind of new biggest holdings here. Shopify at $1,000 just seems so cheap for me. You know, this, look how often this stock has a pullback. you know. I mean, only like 2 weeks ago, I was up nearly 20% on this company. And yeah, you look at that, you know, even in the COVID dip, it was only dropping like 32%. And yeah, we're down like 28%. So in a pandemic, this stock dropped, you know, 32%. And right now, for like pretty much no reason, just that it had a bit of a rich valuation, it's down 28%. And like I said, you know, you look at Shopify and look at it, it hardly has that many drops. You know, that's one drop there, 13%. But look how quick it recovered it. It literally recovered it within 2 months. Yeah, and Shopify at the moment, I'm loading the boat on this one. I'm loading the boat on this one. I think this has just so much potential. I think what this gives to people that want to create an e-commerce site is just unbelievable. I think it's like a baby Amazon. Never going to be the size of Amazon, don't get me wrong. But yeah, this sort of valuation, I really like it, put it this way. Yeah, big fan of this one. Next up, Square. So I have started buying some shares in Square. Once again, hardly has a dip, you know. Sure, 2019, it had a bit of a quiet year. And that was actually a year I should have bought into Square. I was considering it so much and I never bought it. I mean, it said it's a quiet year. It still went up 20%. But yeah, once again, you know, pandemic, stock only went down. On the peak, it went down 54%. But yeah, I mean, it recovered like, that's the thing, it recovered so quickly, like 18% in one day. But yeah, it didn't take long for it to recover. And once again, you know, Square, we have an opportunity now where this one, you know, down 20%. Don't often have that many dips. And it's still at a little bit of this is probably one that I'm like, this one is still at a little bit of a rich valuation. And this is why I'm not buying it as, say, as heavy as, say, like a Golden Nugget, as a Shopify, as a Beyond Meat, as a Tattooed Chef. I'm not buying it as heavy as something like that. But I am buying it a little bit because it will always trade at a rich valuation, and to lose, you know, let's not, you know, brush it, you know, beat around the point here. You know, if your company is losing 30% of its valuation in 2 weeks, that's a big, massive hit. And it's going to be, you know, Square in 5 years' time is going to be revenue growth higher, share price higher. So yeah, just treat myself to a little bit of Square. Next up, Tattoo Chef. So I generally didn't think we'd see the day where this went to $20, and I never ever thought we would get to $18, but we have. Bonkers, absolutely bonkers how this has gone down so much. What we down on Tattoo Chef? Yeah, 32%. You know, who would have thought back in January that this would have such a drop? And yeah, Tattoo Chef at this sort of valuation, I'm buying. Yeah, $18. I really like this one. I think that when I go down the list of stocks that I just mentioned to you, I think Beyond Meats, Draftkings, Golden Nugget, Shopify, Tattooed Chef, those are for me are the ones that I really do like with these drops. So yeah, and the last one, I've started buying some Tesla shares. So I still think this is a bit of a rich valuation, but I still think this has, you know, in the long term, is this share price going to be higher than where it is? 100%. You know, leader in the EV market, technology, the solar space it has. Yeah, it's going to be crazy. And this valuation is so much better for Tesla. I still think that Tesla could go down to a maybe $300, $400 stock. That could still happen. And put it this way, I would actually go as far as saying if Tesla would get down to a $300 valuation, I would probably then make it my largest position, because that market cap now, Tesla was at the point where it was like $1 trillion company, and it's really pulled back. Like at one point, this stock was like I think it was like $1,000, I believe. You know, it was really close to it, and it's had a massive pullback. Deserved, the valuation was high, but at this sort of valuation, Tesla at $300, if that market cap keeps dropping, if that market cap gets into a 400 billion market cap, 300 billion market cap, that's lowered the bow time for Tesla, because they still have massive advantage over everyone else in the market and does deserve to trade at a premium. Let's not forget. But yeah, this drop on Tesla has been very healthy, and it's starting to get to the point now where I would say that Tesla is starting to get to the point where it is getting, maybe I could say the word undervalued. Maybe not just quite there yet. Probably not just there quite yet, but yeah, it is having a bit of a drop, and it's probably like the same position as Square. You know, I bought Square because it is on a big dip, and I see both companies going probably the richest valuations in my portfolio, but I see it being higher than where it is right now, 100% in 5 years' time. 100% Tesla and Square are going to be higher than where they are right now in 5 years' time. But the thing is that if we do start getting an undervalued Square and undervalued Tesla, then it's like load the boat time. And Tesla's one I'm watching really close. I like it. I like it at the valuation it's at now. But yeah, if I can get Tesla at $300, $400, I'm a big fan of that. So we'll see exactly what happens. So yeah, those are all the stocks I bought. Anyway, so hope you enjoyed it. Hope you're okay out there. You know, remember, stocks recover 100% of the time. And you know, all you have to do is look back to March, and you were kind of saying, you know, I wish I bought more on the dip. You get a little bit of dip. You know, don't be too scared of it. You know, it will recover in the long term. And the thing is, even if you've run out of cash now, which hopefully you haven't, but if you have run out of cash, also remember that don't panic too much, because you might run out of cash, but now you can just kind of sit back and lock your portfolio away and not look at it for a month or two, and I bet you'll start seeing some recovery back in that portfolio. So anyway, hope you enjoyed the video. Something a little bit different today. If you could, smash the like button. If you are new, subscribe. If you want to join the Patreon, links in the description. Got all my buy and sells on there, how much I'm increasing every position. Also good to talk to some other investors, I guess, at this time. If you do want to start investing, really good time to now start investing. There's a link to a free trade account. Open up an account through the link in the description as well. You also get a free share, but yeah, thanks so much for watching. And maybe no video on Saturday, I'll see. I might have this was supposed to be Saturday's video, so I might not do a video on Saturday. Might see you on Sunday, we'll see. But yeah, thanks so much for watching, and I'll see you all in a bit.